Hey guys, welcome back to today's video of DIY investing. Today is Thursday, which means I have a weekly Bitcoin update for you guys. I'm going to be giving you guys my bullish perspective, just kind of give you guys my analysis on where I see things playing out inside of Bitcoin's market structure. So, without further ado, let's get right into this. Okay, so to start this off, I think it's smart to just go with the bullish perspective because this is what my primary, this is what I'm expecting for my primary. I don't think that we're going to break this 6,000 support, just mainly because of the fact I think that there's still a whole lot of demand in place, and that's going to in turn bring the prices back up higher. I think that we had a very strong impulsive rally, and of course we did need a correction to fill that. There were some things that kind of made this bear market a little bit more prolonged, but for the most part, things are just more or less bullish as always. We have a lot of good bullish news coming in here constantly with BACT, with just a number of different things that are kind of just proving, and not necessarily proving, but just kind of showing that, hey, there is a lot of demand here. Even though we are in this correctional phase, I don't think that this is necessarily the top before we have a prolonged bear market. And I'm going to explain why. So the bullish perspective, as always, has been this freaking falling wedge. And this is the way that I have it drawn, and this is the way I've kind of always drawn it throughout this bear market. Now, you guys know that I like to count candle bodies over wicks, so that's what I'm going to go with for this example here. So, with the falling wedge perspective, generally what you want to have happen inside of a falling wedge is you want to have at least 7 price confirmational touches on the resistance or support of the pattern. So here we have the first one. We have 2, 3, 4. I'm just going to count these 5, 6, 7, and then 8, and then once more we have 9. If you don't count this one, then we're sitting at 8. But either way, we have plenty of confirmational touches on the descending resistance as well as just trending support. So that alone is confirmation enough for this to be a true falling wedge pattern. Now, what's going to happen, and what I'm starting to see right now, is with this test wick, or that's what I called it in one of my last videos. You can go back and watch that if you want to learn what that is. So basically, what we start to see in a market that's getting close to turn bullish is we start to see these huge volatility candles where whales are taking positions. It causes these massive buy candles to come in. Only what happens in the very base of a move before the market does turn bullish is you get these big wicks where instead of a huge candle, we had sellers kind of eat this back down about 70% of this original move. Now, this just means that there are whales accumulating in this region. However, at the same time, there's still lots of selling going on. And that's what's going to be expected anytime you're at the very base of a move down here. Like if you go back and look at the previous bear market in Bitcoin back in 2013 to 15, you can see that during the bottom stages of about $180 to $200 range, we had similar price action where you had just a lot of volatility, and that's what we're starting to see right here. Now, with this last price action wick that we saw here, what I'm leaning towards, and the way that I've drawn my falling wedge fractal the entire time, is I've been counting candle bodies, and I've been including it in this exact layout. And what happened with this move was we got a breakout. Now, this is a minor breakout, and this could even be an exhaustion wick, something else I talked about in that video. But for the most part, it's very obvious that a bullish candle has broken the descending resistance. And this wick itself went from 6,300 all the way up to 7,800. So that's a huge move just in this one candle alone. And so that to me is leaning much more bullish. The reason why I'm a little bit more bullish, this descending resistance that we've been getting bounced off of, we're starting to hug this descending resistance much more than we are hugging the downtrending support. Now, the reason why we're hugging this descending resistance is because there's more of a bullish sentiment in this market. The bulls are much more, the bulls have much more support, and so they're attacking this descending resistance, waiting to get that breakout. And I think that that's what we had right here. Now, I'm not going to be willing to call this a breakout. I think we need a little bit more of a confirmation, but the price action is extremely bullish. We had more buy volume come in here with this move than we have clear back here since April. So the fact we're holding support here at about 6,000, we're getting more of a bullish accumulation pattern coming in here. That to me is leaning much more of a bullish case. Now, before we get into anything else in my bearish perspectives, one thing I want to point out is if this is a breakout and this is the retest of the descending resistance, then we are going to get an impulsive move back on the upside. And so something we could expect is a strong move anywhere from about 8,500 to 10,000. What I'm going to really want to see, I want us to break 7,500, 8,500, and then I want us to at least come and test close to 10,000. Now, if we can come and do that, that's going to be very bullish of all because it's shown that we've broken 2 lower highs. And if we can hold support on that, then that's going to be extremely bullish, and that's going to point to more of a bullish reversal and a bullish reversal of this pattern. So if we can get, let me redraw this. If we can get a break like I'm expecting here, and we can break out 7,500, 8,500 and come and retest somewhere in this area of 10,000, then that's going to be bullish, and then we should see a little bit of a retest these previous resistance levels at 85, and then if we need to go lower, even down to 75. But then we want to see here and hold support. Whether we hold support here at 85 or 75, we'll just have to wait and see, but we definitely do need to hold support. Now, something that could happen, and something that happened in the last bear market, was we broke out, but then we came back down to test this medium support, and we broke out again, and then we did the double bottom before we broke out even more. Now, I'm not expecting any of that to happen. We had a lot longer bear market, so it needed a longer accumulation. So what I'm expecting kind of with this falling wedge, and if we do break out, I'm expecting us to come up, break out, and then kind of retrace a little bit and then round out before we see more upside to come. I think that this will in turn just create a little one wave before we start to see a massive 3, and then probably start to go take out some of these higher resistance levels at about 17, at about 14, 17, and even previous all-time highs at about 20,000. So this is what I'm expecting with my bullish perspective. Next, we're going to be taking a look at the bearish perspective. Okay, so let's start off this and label this bearish. Now, the bearish perspective, this is one that I'm sure all of you have seen on Twitter, on wherever it might be, but this is just the infamous descending triangle. Now, I'm kind of having to force this thing a little bit because the lower highs don't line up super coordinated with this specific pattern, because of the fact we continue to just retest tighter and tighter and tighter and tighter into this corner. So this is kind of what I'm seeing with the descending triangle. Now, there's a couple things that come into play. Now, with this descending triangle, we have flat support that's held at 6,000 with lower highs all the way through. That's textbook descending triangle. Now, something that needs to be pointed out, if we break support here at 6,000, now what I'm aiming for is, if confirmation for me is going to be 5,800. If we start breaking past 58, then that's going to be confirmation enough for me to say that this is the bearish perspective playing out. However, if 6,000 or 5,800 support breaks, where is the realistic target for the next support level going to be? Now, guys, you got to remember that if 6,000 support breaks, how many times have we bounced off of this? Once, twice, 3, 4, 5, 6. You know, there's so many times that we've bounced off of this support level. So if that falls, that support is going to be a very major resistance that a lot of people forget about. I see this on Twitter and even on Reddit and TradingView. Some people are expecting just one little sell-off that's going to break 6,000 support and then we moon after. And while that is possible, I think that that's very unlikely due to the fact, if we do break this 6,000 support, this is very major resistance due to the fact we've held here for so long. If 6,000 support is broken, I expect personally we are going to at least $3,000, and we could even see a major fallout down to about 1,300, and that would be about previous all-time highs of the last move. However, that's only the very bearish case scenario where we have a 13 to 15 bear market like we did back then. That's kind of what I'm expecting with this if we do break support. What I would expect if we break support, we'd have a retest, and then we'd start to see some strong impulsive moves down until we hit about this $3,000 range. And now from here, we'd have to consolidate for a minute, and then we'd get a bounce. Now what happens after this bounce is we're just going to have to wait and see. We are either going to maintain support and move back up in this cycle, or we're going to continue and make another lower low after we reject off of this previous resistance again. So this is kind of what I'm expecting with this descending triangle. The descending triangle is much more bleak, obviously, because this is a very long accumulative pattern that we've been in. In fact, if we pull up a time frame on this, let's see exactly how long we've been in this thing. 285 days, almost 300 days. And I wouldn't be surprised if we hit 300 days before we actually break out one way or another. That's a very long accumulation cycle. And so it's only going to take longer that we finish this retrace if this is the bearish scenario. So this is kind of what I'm playing for the bearish perspective of Bitcoin. I think that 3,000, and then if we can't hold support at 3,000, then 1,300 is going to be, and that's just going to be a very bleak time. But due to the price action, I'm not leaning towards this. Now, I want to scroll out and show you guys more of a long-term perspective with Bitcoin on a log chart and kind of pitch you guys why I am leaning more of a bullish perspective with this. Okay, so to start off this is just the log chart. This is my log chart that I made with Bitcoin. It just shows the entire price history that we've made up to this point. Now, the reason why I want to pull this up is because I think it really portrays what's going on and what's happened previously in some of these cycles. So, based off of the wave count, we're currently retracing into the 4. Now, for you guys that do not know Elliott waves, the 3 wave is the most impulsive, where you have the most volume, as indicated why we had this massive breakout in volume into this 3 wave. But something else to consider is the 4 wave retrace after the top of the 3 wave. That's always going to be the shortest, less dramatic retrace of the Elliott waves. And that's because it's coming after a move that saw the most bullish price action and the most momentum in the market. So there's still a ton of demand propping the prices up, which is why I think that we've held support here at 6,000 for so long. I don't think that it wants to break lower just because of the fact there's still so much demand in this market. Now, if we go back and compare previous 3 waves, I'm going to show you what I mean by how they hold support very strongly. As you can tell, this 3 wave here was more or less just this bull flag. We came and tapped the trend line and before we had another impulsive move up. Now, the next 3 wave that we had, this is about an 80% retrace, but we pretty much held support at about a 70 to 75% retrace. So the retrace wasn't very much, especially when you come in here and look at this move. Look how parabolic this went after the 1 wave. This 3 wave is freaking massive. Just straight parabolic, all green candles, and we didn't even come down to really retest any of, there wasn't really any support, and we just kept going. Now, the same can be said about this 3 wave, although we do have a lot more support than we did back here. Which just tells me that since we've held support here at 6,000, there really isn't a need for us to go any lower because this is just the 3 wave. And we are going to see another 5 wave in return before we top out and have a similar bear market like we did in 13 to 15. But for the most part, guys, this is still a very healthy market cycle. Now, what's something we could expect here? Now, let's go through here and draw a trend line. So, with this trend line, as you can see, we still have a little bit more time before we even do come and test this. Now, I go from candle bodies to candle bodies because I feel like that is the most accurate way of doing it. But we still have a little bit more ways to go before we do start to see a touch of that trend line. Now, this kind of lines up with my bullish theory as to what I think that we could see with this price action to come. I think that we're going to see a breakout. How high that goes, we've yet to be decided. And then we see kind of a retest before we come and do tap this trend line again. Because if you look at all the previous times in the bull market, we have a breakout in this 1 wave, and then we kind of consolidate, and then we test this trend line again. Now, this is the same pattern that plays out all the time. You can see it right here. We break out, we go really high, and then we consolidate before we come and retest this trend line again. And this is the way it's always been. breakouts, consolidate, retest, trend line. Except what happens is when we start to go really parabolic into this 3-wave, we leave the trend line completely, and then we're just kind of stuck in this hype phase. And so we're right here before we kind of have a final blow off top in the 5-wave, before we do have a long prolonged bear market where we do come and see more tests on this trending support that we've maintained. But for the most part, it's the exact same pattern. You can see that this little ascending triangle was the 1 wave. We consolidated, tested this trend line, and then we start to see the 2nd wave, consolidate, test the trend line, and now we're just in the mania phase where we're kind of stuck out here in no man's land. It's a possibility that we don't even test this trend line at all, and we just kind of break up and just start going up, because that's what happened that we saw back here in the previous hype cycles in Bitcoin in the 3-wave. We didn't really come and test a trend line. This one did a little bit, but this one just kind of hung out. But this is also one of the more parabolic moves because this is the 3 of the 3. So that's why we could have saw such a parabolic rise in that. But for the most part, the pattern is continuing to play out, guys. Whether we come and test this trend line or not, we just kind of have to wait and see how the price action follows. But this is why I'm leaning towards more of a bullish perspective and why I don't think that we're going to break 6,000 support. So thank you guys so much for watching this Thursday Bitcoin update. If you found this video helpful, always remember to leave a like, comment, and subscribe to my channel for more updates in the future. I appreciate you guys so much for supporting this channel. It really does mean a lot. I'm just so thankful that I'm in a position to help kind of coach some of these new guys getting into the market that haven't seen some of these bull markets. I've been here since about $3 to $10 billion in market cap, so I've got to witness a lot of this bull run, and I'm just so excited to see some of these new guys getting into it and how new they are, but how much they're going to learn in this coming cycle. So thank you guys so much for supporting this channel, and as always, I'll catch you guys next time. Peace out.